Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on March 7th. So it's been another bad week in the market, no doubt about it. Just about every major index is down as I record this, which is around 11:15 in the morning. Everyone's down maybe 3.5 to 4.5% on the week, okay? So obviously the intermediate term and maybe even some of the longer term evidence is negative, but either way, that means being defensive. Right now in Cabot Growth Investors model portfolio, we're up to nearly 80% in cash. Now, some people might be 100% cash, some people might be 40. It just depends on how you run your ship. The point is, whatever's normal for you, you want to be quite defensive and just, focusing on capital preservation, okay? Now, a couple of points before we get into a lot of different charts, okay? Number one is, I had a question this week about tariffs and don't we need some tariff clarity or whatever before the market can go up? And my answer was, it was a good question, and my answer was yes, but the only way to tell if we have clarity is for the market itself. In other words, yesterday on Thursday, I think some tariffs on Canada and Mexico were delayed or lifted or whatever, and the market fell 2%. So no clarity. If the market had rallied 2 or 3% on that news, maybe there would be some clarity. So what's my point? My point is, as time goes on, as this correction and downtrend probably goes on, I think we're going to need a little bit of patience here for it to, wash people out and start to build a bottom and whatnot. The news is only going to get more intense. The headlines and this, and now we have the German bonds are doing this and the currencies are doing that. Just stay focused on the action of the market itself, the indicators, and the action of potential leading stocks. That's going to tell you what kind of the combination of everyone's thoughts on all these different things going on. Okay, that's number one. Number two, and really the next thing I'm looking for here is, to this point, we haven't been able to bounce for more than a couple hours. Hopefully that changes this afternoon after I record this, But that's really the next step is how do we bounce when we do bounce? Is it strong? Do we gap up and fade and we can only bounce for a few hours like we've seen the last 2.5 weeks? Do we have some big volume? Do we see, some fresh leadership potentially starting to separate from the pack, that sort of thing. I think right now when everything's just kind of going down almost every day, yes, there's some things that are resilient. We're going to talk about that, but it's hard to really know if those are just resilient for now and then they're going to get hit next week or that sort of thing. So really, I think that first bounce that goes on for at least a few days, hopefully 2 or 3 weeks, I think will tell us a lot going forward. And I do think there could be some fresh leadership, like I said, that does separate from the pack, okay? But for now, like I said, I think it's just about a little bit of patience. Last year was a great year, number one. And number two, there was a few weeks we were defensive type thing. But for the most part, it was managing your mostly winners. It was looking for stocks to buy, that sort of thing, okay? I'm not saying it's going to be the mirror image this year, like it's a huge down year. I'm just saying there's probably going to be more normal where there's going to be 2 or 3 periods where you're going to be in cash for a few weeks and just kind of waiting it out. And when the turn comes, hopping on the new leadership and riding those trends. For now, though, it's one of those times that requires staying close to shore and some patience, okay? Let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. There's not really too much to say about the indexes. Let me get out my line here. This is the NASDAQ. 20,000 was sort of this distributional top. I don't like to say top because that brings with it a connotation. What do you mean top? Is it a bear market top? Is it 2008? Is it a correction? I'm not big into labels and all that. I'm just saying there was clearly distribution here after a huge run in growth stocks for the prior year. And now we're just seeing really abnormal weakness in a lot of, in the indexes. The NASDAQ's down 10% in 12 days or something like that. And like I talked about last week, some of these leading stocks, falling 40 or 50% in 3 weeks is not normal. Doesn't mean they can't bounce. I'm sure they will at some point pretty strongly. But, in terms of, normal action within an overall uptrend, that's not normal, okay? So clearly below the 50 days, we are kind of below the 200-day line. So we'll see how that goes. Our longer term model we kind of need to see a couple of weeks below it, closing below it. So we'll see. Maybe that clicks next week, I guess. But I think more importantly, the horse is already out of the barn, right? So we're well below the 50-day moving averages in just about every index. So that's the NASDAQ. The S&P's better, a little bit better, not as weak, but even so, clearly below, intermediate term support here. And you just look at things like this is the IJR. So this is the S&P 600 small cap. It's kind of a disaster. The MDY is the mid caps, kind of a disaster, all that sort of thing. The New York Composite, I do have to say, I don't know if there's been some even though oil's been weak, some oil stocks have held up. There's been some stuff in there that's held up pretty well, some interest rate stuff, some defensive stuff. So this does look better, and this is an important index. It is pretty broad. So it's a small ray of light, I guess I would say. You can see the relative performance line on the New York Composite doing well. But even this is, it's below the 50-day. At best, you could say, the intermediate term trend here is basically sideways. So either way, intermediate term trend is clearly down, okay? And then, the growth stuff, I'm not here to just relay the horror show, but, just to give you an idea of what's going on. I mean, this is the IPO fund, 48 to 38, basically 38 and a half, so what is that, 20-something% in a few weeks, okay? You look at the ARK fund, this is just in 12 days, 15 days, something like that. Obviously very volatile fund, but 68 down to 51 or whatever we're at right now, I guess under 51. So that's down. I mean, I could tell you right now, it's down as I record this 25.8% from its high, which was, a couple weeks ago. So not normal action. The FFTY, which is kind of sort of tracks the IBD 50 index, kind of, but it's really more of just considered another fund that owns a lot of, growth stocks sort of thing. And you can just see what's been going on there. Now, I mean, I'll buy all I can of these stocks at zero, okay? So they're not going to go down, they're not going to go down to zero. If they do, I will buy them and betray my rules and buy them at zero. But, at some point we will, maybe we puke a little bit today or maybe come into Monday, there's some bad news and we puke. At some point we are going to get a bounce. And like I was saying earlier, it's probably easier to see on the NASDAQ here. How we bounce is going to tell me a lot. I mean, let's just say, and I'm totally making this up, but say we puke a little bit, a few percent more in a couple of days, and we're down here and everyone's worried and there's bad news. Then we start to bounce, okay? I think, how we bounce, do we gap up in the morning and fade and it's like, oh, the NASDAQ was up 1%, but really they were selling all day. Is it opening down and thrusting higher? Is there big volume? Do we see 2, 3, 4 days in a row of really good volume buying in the market in some of these stocks, even if it's some of the beaten down stocks? What I'm really looking for is a low that we can work off of. It doesn't mean it's going to be the low and we go straight up. I'm all for that, but I doubt it at this point. But that's going to give us sort of a Polaris in the sky, so to speak, that we can judge other stocks. So if the NASDAQ bounces like this and then comes back down and retests this, again, I'm just kind of making up this scenario, but say that's what happens, and you're looking at 3 different stocks and one of them does this, it's much higher than the prior low, one of them is like the market and one of them is much weaker. That's going to tell you a lot about which stocks are stronger, which groups are stronger, that sort of thing. Okay, right now, admittedly, all you can really say is we're in a downtrend. It's pretty fierce. The fact that it's just been a vacuum of buying pressures, really. It's almost like the opposite of a blast off. I'm not saying it means we're going to go down for 9 months or anything like that, but right now there's no question, the sellers are in control. So we're just kind of waiting mostly on the sideline for that bounce, okay? Moving on, just a couple other things. I like to look at the XLP. It did kind of stall out here a little bit, but you can see it's clearly outperforming. There's been money flowing into the Johnson & Johnsons and the Cokes and stuff like that, okay? So there's no question that money's flowing in the toothpaste and toilet paper and obviously out of all the AI software and pretty much anything else, to be honest with you. It's not even just growth, okay? So there is a big move into these sort of stocks. I would say, though, just bigger picture, I can't show it to you. Number one, there's no question sentiment. It takes time, but sentiment is starting to get a little panicky, I would say, short term. I'm not saying, we bottom and go straight up, like I said, but short term, we are seeing some sentiment. And I would say longer term or bigger picture, we have seen interest rates really crack here. Now, we'll see maybe the market rallies and interest rates spike. I mean, it's so news driven these days. But if interest rates can come down here and stay down, and there's now some talk that the Fed might, or the market thinks that the Fed might, cut 2 or 3 times or whatever this year, whereas a few weeks ago they didn't think they were going to cut at all. This is sort of bigger picture background positive, so to speak, in the market. So it's just a process that's going on. Eventually we'll bottom, we'll etch a bottom, leaders will emerge and we'll ride those higher. But for now, it's a little bit more patience, okay? But I do consider interest rates a help, okay? At this point, I'm just running screens for things that are holding up or maybe held up, got hit this week, but still keeping an eye on them to see if they can snap back like a tennis ball, okay, if the market bounces. I still see a lot of strength in medical names. Now, some of that you could say is defensive, and there's a flavor to that because, drugs, people are on these rare disease prescription drugs, has nothing to do with the economy basically. But so far, EXEL, I think that's how you pronounce it, EXEL, I think I mentioned this before, not just breaking out, but holding in here so far. Okay, the longer these things can hold up after a move, the greater the chance that they can continue higher. Not to keep going and playing these scenarios forward, but that's what I like to do in these situations because we're not really doing much right now. If the market does hit a low at some point and bounce, the question is, does this sort of bounce with it? Does this sort of sell off and the beaten up stuff bounces? How that works will tell us a lot. But so far, there's no question that EXEL is very resilient. RPRX is kind of interesting. A lot of these things that weren't overplayed during the last year are hanging in there. Okay, so this, you could see this is a biotech. It's really like a royalty. Obviously, that's the name of the company, Royalty Pharma play. And you can just see it's been out of favor for years and years, but it changed character, buyback program, pretty good outlook here in January. And you can see the stock continues to act well. I still think a lot of these things, good stocks can go bad in a hurry in a bad market, but it wouldn't, I wouldn't be opposed to do what you want to do, but a shakeout or something like that, but still within an overall uptrend could be tempting, as long as the stock doesn't completely fall apart. ALKS, ALKS, which is another one. There's a few of them. You can just see this nice volume cluster after earnings and just kind of hanging in there. It hasn't been the most dynamic performer, but you can see it's kind of changing character here in the last few weeks. A lot of other names I've mentioned before, so Take-Two Interactive. Again, you can see the stock is acting well, but in this environment, any sort of breakout attempt or move into resistance for a lot of names, it's going to be met with selling because people are still in the lightening up phase. But overall, you have to kind of grade on a curve here, especially if you're just watching it. Nice breakout here, built a nice base, broke out, and overall, the stock is still holding well above its prior base. So that looks pretty good to me. Interestingly, this week, two of the, I would say, laggards in the side, not that cybersecurity's been hot, but they did react somewhat well to earnings. This is Zscaler. This was a leader back in the pandemic, and it did have a nice run after the bear market, okay? But it's been base building here and really bottom building for quite a while. The numbers are good. They're slowing down, but they're good. I don't know about the earnings here going forward. Maybe that's what the market's been discounting, was a slowdown in earnings. But nice reaction to the quarterly report this week. Yes, there's still resistance, but again, you're kind of looking at this, just keep an eye on it, saying, let's say the market does bounce. Does this thing just power through resistance on huge volume? Okay, now you got something to work with, okay? OKTA, OKTA. Okay, here we go. Same sort of thing. It's been sort of a laggard. You can see it's been building this huge structure, kind of like ZS, but kind of a nice cup with handle if that's your thing, and then a beautiful reaction to earnings this week. Interestingly with this too is some of these stocks, not to go on too much of a tangent, but you'll see, like this is Elastic, ESTC, right? It reacts well to earnings, looks okay, but then just completely implodes. Okay, so everyone uses that strength to sell into. Maybe that happens here, but what's interesting about OKTA is it had not just 1 day, but 2 days of big volume buying. You can see down here, which is kind of like classic bullish action. And now it's pulling back. We'll see how it goes. Could it continue to just melt down? It could, but in terms of watching it, that's kind of exactly what you like to see. So kind of a classic breakout above 100. We'll see how that handles itself. Again, some low-level things. So this is Clearwater Analytics, kind of a cloud software player. It needs some work. It still needs some work, but you can see it just broke out here, so it's fresher. This is back in, I want to say October. Had a nice, 3-month run, popped on earnings, and since then it's been kind of building this base. 2 weeks ago, gapped on earnings. You can see so far it's kind of been a gap and fade. But just kind of keep watching it in here. Could find support in here. There should be some decent support in this area. And if the stock can rebound, again, it's probably not going to rebound and power ahead if the market's falling 2% a day. But when the market bounces, can something like CWAN power ahead of resistance to at least give you a heads up like, hey, the stock might want to go higher. It wasn't that far from its new closing high was around 33, so it wasn't that far from it before the recent sell-off, okay? Light and Wonder, same sort of thing, kind of came back to resistance. This is a gaming play, LNW. Got hit on earnings back here, futzed around for a few months, and then really kind of had what I like on the weekly chart here was 3 straight weeks of kind of accelerating buying volume. Now, of course, then we have this week, which is ugly. But so we'll see how it goes. Keep an eye on it. Does it keep melting down? Maybe, but can it sort of find some support in here and start to build sort of a tighter, more proper structure? It's possible, okay? NTNX, I think I mentioned this last week. Maybe I didn't. But again, tried to break out. It's kind of failing. This is kind of par for the course. But you kind of have this big structure in here. So again, it's just one of these things where you're watching it. Does it completely implode and just, next week it's down here and it's like, why did I ever mention this on this video? Or does it find some support in here in 2 or 3 or 4 weeks from now when the market's at least in bounce mode? This thing is back up here challenging its old highs. Okay, so we'll see how that goes. A few others that are kind of, I wouldn't say are my normal things, but just running screens, you kind of see things. This is Rocket Mortgage. We mentioned interest rates coming down. This thing looked good, actually. It broke out, and then it just, boom. Just completely fell apart. I will say it's been up 1, 2, 3, 7 weeks in a row, the last 2 on big volume. Now, there's a ton of overhead. It's just right now getting back above its 200-day moving average. So I'm not saying, if anything, this looks like more of a, probably people are going to be wanting to lighten up on it if they happen to still own it. But with that said, just on an intermediate term basis, the trend has turned up. And let's see, if it pulls back, how it pulls back, okay, that sort of thing. But it's just kind of something where money could be rotating in some of these interest rate sensitive ideas for the first time in a while. Maybe rates are going to finally, maybe inflation, is quote unquote finally cooked here, especially if the market weakens. A few more ideas, okay? China, okay, this is FXI, this is KWEB. Both are kind of similar things. We mentioned this before. They had this huge stimulus announcement back in, I want to say September. China did. Okay, so you had this huge rush higher, then it just kind of faded. But now it's kind of perking back up. International stocks look better, and China certainly looks like one of them, okay? Could this be the rally that top right here and it just fades? Of course it's possible, but so far so good, okay? Fez is another one. This is a ETF that I'm not that close to this ETF, so do your own research. I'm just saying this is kind of, it's called the Euro 50. It's 50 big cap stocks in Europe. Europe's been doing better. It's not a dynamic, it's kind of like the Dow basically. But you can just see on the daily chart, while our market's been doing, this obviously, this has been trending higher, nice pop here. I wouldn't be chasing things in this environment because even though things can be out of gear, they usually eventually come back into gear, but certainly FEZ looks pretty good. And last but not least, of course, is gold. I'm not a gold guy, for better or worse. Gold's had a pretty good move. Gold bullion's had a pretty good move, but the stocks are looking better. This is, Gold Fields. Some of them are a little bit more tied to the dollar if they're overseas and the dollar's weak. That helps them, so on and so forth. But GFI is one. Wheaton Precious Metals, WPM, this is kind of a streamer. Looks pretty good, kind of poking out to new highs here. So, these things are usually better buys on dips, but, there's no question that if the market's going to be in trouble for, and I'm not saying it will be, but say the market is in trouble for another 3 months, and there's tariff uncertainty and the war in Ukraine and all this stuff, there's no question that the environment could be ripe for gold, okay? But for the moment, it's just, like I said, it's really just about patience. It's not going to do this every day for 6 months. If it is, we'll start a commune or something together. But I don't think we're just going to go down every day for the next 6 months. At some point, it will be emotional. We could get a little bit of a puke here. It's getting kind of that kind of feel to it where we kind of might puke a few percent in a few days and then find support. And like I said, the next step of this process, if you're already on the sideline, mostly on the sideline, is basically to see how that bounce goes. The stronger, the better, obviously, but more, I think just as important will be what is bouncing and how strongly that individual stocks are bouncing and themes. Is it just a huge rush into consumer staple stocks and, growth stocks can't get off their knees, the NASDAQ can't really rally much? Or do we see the NASDAQ rally, some of the beaten down names pop, which is pretty likely, and some of these higher, I won't say high relative strength, I'll say resilient stocks pop? If so, like I said earlier, that could be the beginning signs of some early signs of fresh leadership for the next advance, okay? That's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.